focuses on profits and nothing else, right? That is the business making good profits or not? So obviously, if you want to know what the business's performance is, you need to rely on certain performance indicators. So one of the most important performance indicator of a business is the profits. So one financial statement that we make is what we call the income statement, which focuses only on calculation of profits. The other one is what we call the cash flow statement. The cash flow statement focuses only on cash and cash equivalents. We know that cash is the mother of all assets, right? So profit is one important area which represents the performance of the business. Cash reserves and cash equivalents, the strength of cash and cash equivalents in the business is another very important area. So we have two very specific financial statements focusing on a very specific concern of the business. Are we making good enough profits, or do we have enough cash and cash equivalents to sustain our operations in the future? And then thirdly, we have a more general financial statement. We call it the balance sheet, also called statement of financial position. Statement of financial position, right? So this statement of financial position or the balance sheet is more general in nature, unlike income statement or cash flow statement, which are more specific. They are more specialized area of analysis, just the profits and just the cash equivalents and cash. But balance sheet is more of a general statement. It represents all other assets, all other performance indicators, basically, or every other factor on which the health of the business depends, other than profits and cash. Other than these two areas, although cash will also make a part of balance sheet, but profits or cash focused analysis, or balance sheet is a more general analysis. It represents generally strengths and weaknesses of the business. So this balance sheet, this one, the third financial statement, that is based on this particular conclusion. So we are going to make the balance sheet. We will learn how to draw a balance sheet today. And our balance sheet, one of the three fundamental financial statements, is going to be based on this principle: assets equals capital and liabilities. So how do we do this? Let's go to this question now. 1.9, it says, draw up G-Pati's balance sheet from the following information as at December 31st, 20x8. Right? So this is the business of G-Pati, and we know that G-Pati is simply a sponsor courtesy the business entity principle. Business entity principle के मुताबिक आप business as an organization, ठीक है, this is who you are, and G-Pati happens to be one of your sponsors, your owner, right? So in your financial records, you have these items given, and we have to draw a balance sheet from these items. So how do we do this? I will draw a balance sheet for 1.9. You will do the same for 1.10. So let me minimize this part, and let me show you how we make a balance sheet, right? This is 1.9. So on top, we start with the name of the business enterprise, or if the name is not mentioned there, we will put the name of the owner on top. Then we title the accounting statement. We title it as the balance sheet, and then we put the date next to it, and the date is written like in the form of this expression, as at, what's the date? 31st December 20x8. 31st December 31st December 20x8, right? That's how we title a financial statement. any financial statement, any of the three financial statements we make, we will learn to make income statement and the cash flow statements later on as we move along the syllabus. Right now, just the balance sheet. Every time we make a financial statement, we have to be a little formal about it. And the formalities that we need to do is that we need to identify the name of the owner of the business on top, then the name of the statement, and the date for which, the time period for which we are making this financial statement. So in accounting, we call it the three W's, right? The three W's over here is what, when, and for whom, right? So what are we making? We are making the balance sheet. When are we making it? We're making it at 31st December 20x8. And for whom are we making it? We're making it for Gpati, the owner, in this case. Every accounting statement will have, every accounting statement will have a standardized layout. Let me just draw this. You usually have at least two columns. You can have more than two columns, but usually two columns will be enough. Vinal has just joined. Okay. Vinal late हो गए बेटे आज. Okay, so just a sec. Where is the chat? Let me turn over the chat. Where did my chat box go? What is happening today? Okay. Sorry. Okay. So we have two columns. I have some technical issues today. My chat box keeps vanishing. So we have two columns on the far right side of the paper, right? And these two columns are to be for us to place the amounts involved, right? The two columns distribution, which you will see very common in your accounting statement, this last column here, that is what we call final figure column. That means if you are trying to calculate something and you have come to your final figure or final conclusion, that final value comes here in this final figure column, right? And this second last column here, this one, this is what we call preliminary calculations column. So that means if you want to do any preliminary calculations which you need to do in order to arrive at the final value, then all the additions, subtractions, multiplication, divisions, etc., whatever you want to do, that is going to be shown here in this first column, and then the final answer goes here in the second column, right? Okay? So let me demonstrate how we do this. So our balance sheet is going to be based on this simple fact that assets are equal to capital plus liability. So we are going to list down all our assets in the upper half of the balance sheet. So we are going to create a section called assets, and now we are going to refer to our question, and we are going to see what options we have. We have the first item, capital, which is not an asset, right? This is not an asset. Let me just do the color coding just like always. Let me identify every liability in red. Capital is not an asset, but it's an obligation. Creditors are your obligations, and I believe that's it. Everything else is your asset, right? So your debtors are your asset, your van is an asset, fixtures, stock of goods, and cash at bank. So you agree with the color coding here? Greens are your assets and reds are your obligations. Okay? Good, Manal. Thank you, Asma. You understand, Misha, Mahin, Mursali? Good, good. Alicia, fine. Amal Mariam, good. Excellent. Someone has joined with their device name, Honor 10 Lite. So it would be better if you had mentioned your name so that I could address I have to take an attendance as well. So please, when you join, make sure that you have signed in your Zoom account with your name, because that is what I need for your attendance. Okay. So now I'm going to put the assets one by one here. The first asset मुझे वो छोटा करना पड़ रहा है because I have to write it on the screen. So uh, uh, मैंने ये worksheet वैसे post कर दी थी Google Classroom पे. If you happen to download it or if you can access it, fine. Otherwise, I'll be able to uh, इसको बड़ा करूँगा अभी view को थोड़ी देर में. So the assets, the first asset in line over here is the debtors. Debtors are the people who owe us, right? Debtors are also sometimes mentioned as trade receivables. Trade receivables. Trade receivables or debtors. They both mean the same thing. It means that certain people owe us, and the amount involved is 1,200, right? Then the next one is van. Van is also one of your assets, right? So van is going to be mentioned as 3,800, I believe. Yeah, $3,800 van, right? Then you have creditors. Creditors is not an asset; it's an obligation. We will leave it for the second part. Then we have fixtures, right? Fixtures 1,800, I think so. It's too small for me to read. Then we have stock of goods. Stock of goods, also known as inventory, right? The stock of goods or inventory of goods is $4,200, right? And then you have cash at bank. So cash at bank is $300, right? Okay, so this is what the assets list looks like. So we will populate all these values in the preliminary calculations column, the first one. Then we are going to add them up. I hope some of you have calculators, so if you can tell me the total of this column in the chat box, please. Please add up these values and tell me what the total is. 11,300, Asma. Okay, I want you all to have your own calculators and do your own calculations, because that way we will be able to verify each other's answers as well. Because अगर एक शख्स गलती करेगा और फिर वही गलती मैं यहाँ पे पोस्ट कर दूंगा और आप सब लोग यहीं से कॉपी कर लेंगे, then the same mistake is going to affect everybody's answer. So I want all of you to have your own calculators and do your own calculations and mention. Thank you, Asma. Thank you, Alicia. Okay, so we have two different sources confirming the same value, 11,300. So that is how we put it. So this is the procedure. This is how the procedure goes, right? When you make an accounting statement or a financial statement, you put all the elements of calculation in the first column, and then the total or the net value, addition or subtraction जो भी आपने करनी थी, उसके बाद जो net value आती है, then you put it in the final figure column, right? So, and the final figure that you write over here is usually parallel to the last value, and then you draw this line here, right? So that's how the accounting workflow goes, right? You accumulate all the values that you need for your calculation in the first column, and then you determine the resultant, and the resultant is placed in the final figure column. Okay? Understood? Give me a green check on the participants window if you understand that. Okay, great. Great. Madiha, आपको नहीं समझ आ रही बेटे? Asma? Madiha, Asma? Do we understand this part? Okay, good. Iman, thank you, Asma. Madiha, can you hear me? Okay, Madiha probably cannot. Acha. So this is the asset side. So we are done with the first part of our accounting equation. So assets part is done. The other side of the balance sheet consists of your obligations. So basically your balance sheet is simply a list of your assets and the list of your sponsors, people who have sponsored these assets. So the next section is going to be the capital section. The term that we formally use now to represent capital is equity, right? Equity is the term that we now use to replace the term capital. Equity is a more it is a it's a bigger set. Equity is more like a universal set, and capital is more like a subset of equity. I'll explain this connection after this. But for now, you can take equity and capital as the same. So equity or capital means the same thing. Okay. So your equity consists of capital, right? And in this case, when you look at the original information, your capital here is $7,200. I'm sorry, I'm going a little slow here today. I'm not feeling too well. So capital is $7,200. So we are going to put capital in the first column here, right? 7,200, right? And then the liability section. So we are done with the capital section. Now we look for liabilities. We know capital is a non-repayable obligation for the business enterprise, and liabilities are all the payable obligations which have a clear-cut time frame for a repayment. So equity section, and then finally the liabilities section. And in this case, we only have one liability, which is creditors, $1,600, right? This liability only. So we will mention liabilities may creditors. Creditors are also known as trade payables. So just like debtors up here, right? Debtors are the people who owe us, also known as trade receivables. Creditors are the people we owe. We also call them trade payables, right? And that liability is going to be how much? This is $1,600. So $1,600. So we put it here as $1,600. Okay. Now comes this is the general layout of the balance sheet, but it's not complete. So let me just go back to our original accounting equation. Now we know that assets sum is always equal to the capital and liabilities ka sum. So that means if our conclusion in our foundation of the subject, which is basically this equation, if this is true, then when we list it down on the balance sheet, the two sides of the balance sheet should also be the same. So if the assets, they come out to be at 11,300, the obligations should also come out to be 11,300. Over here, the total of these two should also be 11,300 over here. But you can see it's not 11,300. There is something missing here, right? So now let me just get it. We know that this balance sheet has to balance, and that is why this financial statement got its name as balance sheet, because this balance sheet must balance. That means this total of 11,300 must be the same as the other total, which is actually a sum of your capital and liabilities, or equity and liabilities. So the assets total should be the same as your liabilities ka total or obligations ka total, right? But in this case, it's missing. Something is missing here. That is why the balance sheet is not balancing, right? So now what is missing here? Now let me explain the meaning of equity here, right? The term equity is basically, it simply means owners or owner's stake in the business. So what is owner's stake in the business? That is what we call the term equity. Should we put 7,200 in the final figure columns? 7,200. Alicia, yes. Alicia, I will come to this in a bit because there is a little catch here. So I want to explain that first and then I will come to the formalities कि आपको कौन से वाले figure कौन से column में डालना है. I will come to that in a bit. So equity is owner's stake in the business entity, and that means from a business entity's perspective, we know from the chapter one, the first lesson, that we will always analyze things from the business entity's perspective and never from the owner's. So if we see equity from the business entity's perspective, that means that we owe this amount back to our owner. And from our previous discussions, we also know that owner, what else do we owe to owner? So we owe capital to our owner. Capital represents the initial investments contributed by the owner towards you. And since these contributions have been provided indefinitely, we owe all the profits, whatever profit that we make. We are the business entity, so we owe all of these profits to our owner. So that means your profit, if you ever make any profit, that profit is going to be your obligation towards your owner, just like this capital here. So this is what you owe to your owner because the owner has literally contributed, financially contributed towards your assets. This is what you owe to your owner because this is your commitment, because the owner has provided you capital indefinitely. In exchange of whatever profits that you make, you will owe them back to your owner. So this is what you owe to your owner, and this is also what you owe to your owner, the profit. But there is a possibility that the owner may withdraw things from you, right? The owner has contributed a lot. They may withdraw these profits from you. So once they withdraw profits from you, we call this as drawings, right? So drawings simply means what owner has withdrawn from you, has taken away from you. So capital and drawings, they are opposites of each other. Capital is what owner invests in you, contributes towards your asset. Drawings is what the owner takes away. Drawings is what he or she takes away which were previously invested or contributed by them, right? So this is what you owe to your owner in more detail. Okay, so capital is what you owe to your owner because the owner has contributed, initiated you in the first place by contributing certain sums. Profit is what you owe to your owner because that's your commitment with the owner for providing the capital indefinitely. So these two are your obligations, so they will be added. And drawings will reduce your obligation towards your owner because these are the amounts the owner has taken away from you. So now you owe him or her less. So you, the business entity, will owe more for capital, you will owe more for profit, but you will owe less for drawings. So if we understand this equation, if we understand the meaning of equity over here, so please give me a green check mark in the participants window. Otherwise, a red cross. Okay, great. Amal, Alina Sayed, we understand this equation? We understand what equity means? Alina Sayed, Amal does, very good. Madiha, right. Okay, now we come to Alicia's question in the chat box. She says that capital is the final value, so shouldn't we put it in the final column? Yes, we will put it in the final column. But over here, there is a problem that we were facing now, moving back to the original question. Usually, when you are given these values should balance your balance sheet. But in this case, you see that this total is not equal to what we should have here, right? So there is something missing. So what could possibly be missing in this equation, in this balance sheet? Your assets, they total at 11,300. Your overall obligations should also be equal to 11,300. So if anyone can guess how we can balance this balance sheet, Maheen, excellent. Maheen's answer on chat, everyone. Maheen said profit is missing because now we know that equity section over here in the balance sheet, capital is only a small part of the overall equity of the business. So there is a possibility that your profit must be missing, and if that is the case, then you can always find out profit by working backwards from these totals, right? So what do you think, how much profit we should have here on the balance sheet in order for this balance sheet to fulfill the equilibrium here? Asma says 2,500. Okay, please calculate. Alicia says 2,500. 2,500, Madiha. Thank you, Madiha. Everyone understands that how we get $2,500 of profit here? Thank you, Minal. Please give me a green check on the participants window. Okay, 2,500, right? So I'm going to erase all of these notations, red notations over here. We are going to now insert how we show this in a formal working. We're not going to draw these red arrows and question marks and dotted lines. We're not going to do that. Let me just erase everything here. Oops. Wrong. So what we are going to do is we are going to do it on our calculators, and then we will arrive at this profit, and we will insert this profit over here, and we will leave an additional remark for our examiner. We will put the profit and we will put this additional remarks for our examiner that this is the balancing figure. In accounting statements, when we refer to something as the balancing figure, that means that figure was not mentioned anywhere in the original instruction, and you had to make certain assumptions and you had to work back to this value. So examiners understand that how you work back was the same as वो जो सारी red notations मैंने भी erase की हैं. So the examiners, they understand that how you did those calculations. All you have to tell the examiners that you have calculated this $2,500 as the balancing figure. That means you have worked it backwards from this value. You worked it backwards from this value, and you connected all these dots and you arrived at this conclusion. Okay, so remember, this is just a very basic introduction to balance sheet. Balance sheet is way more detailed than what you can see on your screen right now. This is just to get you started, right? That is why we are not going to worry much about the columns distribution and what value should come there. Filhal, I want you to play safe and easy. All you need to know is that if you need to make some calculations, so you will show all these calculations in the first column and take the answer in the next column, the final figure column. So all of the elements of calculations are going to be mentioned in the first column, and then the final answer goes to the next column. Later on, when we will discuss balance sheet in more detail and we have a lot more items and we won't be sticking to just 2 columns, we may be adding 3 columns or 4th column sometimes, then we are going to be particular about what value appears in which particular column. Right now, just play safe and play easy, right? So this is your balance sheet. I'll give you 5 minutes for 1.10 here. 1.10 is where you have to draw a BRICS balance sheet as at 30th of June 20x6 from the following items. Remember the profit assumption that we made, before we move on. This profit assumption we made here, this one, This was only because of the reason that the balance sheet totals were not agreeing with each other. Assets total was different, and the obligations total was coming out to be different. And that is what led us to make this assumption that we probably are missing a profit value here. And that's how we calculated it, working backwards. But if the balance sheet values, given values, they are already balancing out each other, then you don't have to make this assumption. That means the profit has already been calculated and has been merged into the capital value. So in 1.10, I think, if I remember correctly, in 1.10, the balance sheet will balance on its own without the inclusion of the profit value. So it should not take you long. Small balance sheet quickly, and then we will move on. Excuse me. Okay, so you have 5 minutes at the most, and please make your balance sheet. And once you made the balance sheet, then and if it balances, then give me a green check mark, and if it doesn't balance, then give me a red cross. Quickly, please. Thank you. Alina has asked a question. Is it possible for obligations to have a higher value than assets? Alina, it's not possible for obligations to have any different value than the assets. Assets and obligations total must agree. This is the biggest conclusion of accounting. Remember, this is the very foundation of accounting, जिसके ऊपर आपका सारा का सारा बाकी का accounting workflow is going to be based. So it is impossible for assets and obligations to be out of equilibrium. They must always be equal to each other. And that is why we had to make that bold assumption of profits in the previous question, right? So you can't have assets exceeding obligations or otherwise. They must always be in equilibrium. Why is it so? अभी तो हमने बिल्कुल बेसिक सी चीज़ देखी ना उसको. So अभी हम देखेंगे आगे the principle of duality जब हम पढ़ेंगे. It's such a profound principle. I mean, we will understand why this equilibrium is so important when we discuss the principle of duality, right? 14,300 Madiha Shahzad says Minal Iqbal has already finished 14. Is it 14,300 with which the balance sheet is balancing, right? Yes, Maheen Marceline agrees. Great. 14,300, Minal says. Asma has also finished. Excellent, Asma. Let's wait for your friends. Amal has also finished. Iman Farooq has finished too. Amna Kashev is finished. Excellent. Okay. Okay, people, I prefer that if you want to ask a question, I prefer that you unmute your mic and you can ask your question. But if you are not comfortable doing that, it's okay. You can use your chat box. I'm just saying that it'll be more efficient and the session will be more interactive this way. So I am not stopping you from unmuting your mic. Just unmute your mic and say it. Or if you're comfortable writing, then it's okay. You can use the chat box for that. Okay, Alina Vakas, are we done, bete? Everyone is done? Yes, Alina is done. Okay, good. Thank you. Now let's move on to this next part. This next part, जो अभी हम बात कर रहे थे, the principle of duality. This next question, 1.11, somebody got dropped out before, a very important part. I hope they join back soon. So this part, the next accounting principle in line is what we call the principle of duality. The next question that we are going to do is basically the introduction to what the principle of duality is, right? So just like uh, duality principle, how many of us have done physics in O levels? Asma, yes. Who else? Physics or general sciences at any point. I mean, I'm sure everyone has done sciences at some point. But O level physics वाले बच्चों को, you know. Okay, do you remember the Newton's laws of motion? The laws of motion, Newton's laws of motion, right? The O-level accounting student already know what the principle of Alicia was dropped. Alicia is back. Thank you, Alicia. So the laws of motion, there are three laws of motion. The first law was about the inertia, and the second law is about the connection between acceleration and the mass. But the third law of motion, Newton's third law of motion, does anyone recall that? Can can you tell me what the third law of motion was? It's a very popular law. Even if people who don't take physics or sciences, they know what Newton's third law of motion was. What was that? Every action has an equal or opposite reaction. Thank you, Maheen. To every action, there is an equal. Absolutely, Alina. Correct. Every action has an equal and opposite reaction, right? You know why? Why an action has to have an equal and opposite reaction? We know about what's and how's in our primary education, but we don't know the reasons behind those. Why is it that every action has to have an equal and opposite reaction, right? So, the duality principle, this is actually the duality principle, right? What we are going to discuss in accounting is connected with the general wisdom. Accounting, physics, social sciences, philosophy, these are not independent disciplines by nature. They are all parts of an overall collective wisdom. वो तो हमने अपनी convenience के लिए इसको subjects में divide कर दिया ताकि हम focus कर सकें इसको properly. But these are all a part of a general wisdom, right? Before the industrial age, people never used to have subjects. वो तो हमेशा जब भी पढ़ते थे तो वो philosophy भी पढ़ रहे होते थे, वो sciences भी पढ़ रहे होते थे, वो social sciences भी पढ़ रहे होते थे, वो spirituality and religion भी पढ़ रहे होते थे. सब कुछ एक ही subject हुआ करता था, right? Then comes the Industrial Revolution, and then we decided that we need specialists, and that's why we divided the overall that main universal subject into accounting and economics and physics and chemistry and literature and English and history, etc. Right? Anyway, so duality principle is exactly the same as Newton's third law of motion. Now, why is this condition that to every action there has to be an equal and opposite reaction? Because if action is not equal to reaction, then what will happen? The universe will cease to exist. The universe exists because of a very delicate balance, right? That delicate balance is the balance that is the sum of all action forces being counterbalanced by reactionary forces. If action forces are not balanced out by reaction forces, the universe will fall out of equilibrium and will cease to exist. That is why everything that poses a dilemma to us, they always exist in pair. When I was a child and I was growing up, I always had this problematic question in my mind that if evil is so bad, then why did God create evil in the first place? Now I know, I've been teaching this for 25 years and more, that if there is no evil, then there is no equilibrium. Evil and good are some things that we have created. These are tags that we created out of our own intellectual, higher brain function. So, God never created anything good and evil. We made things good and evil. We tagged them as good and evil, right and wrong, dark and light, heaven and hell, God and Satan. We created Batman and we created Joker. Have you seen Batman Begins? Batman Return, The Dark Knight, sorry, the Christopher Nolan trilogy. But has anyone seen Batman, your Christopher Nolan wali Batman? Christopher Nolan Batman trilogy, see, there were three-part. Take Batman Begins, The Dark Knight, and Batman Returns, I guess. Alicia Azim has seen, Amal Mariam has seen. Okay, I'm really glad. If you remember the Joker, the second Batman, The Dark Knight, जिसमें Joker आता है पहली बार. if you remember, वो एक बड़ा मशहूर सीन है जिसके अंदर बैटमैन टॉप ऑफ द बिल्डिंग खड़ा होता है and he's hanging on to Joker upside down by his leg. And Joker is laughing at Batman. He says that you can't drop me off this building and you can't kill me because if there is no Joker, there is no need for Batman, right? That is such a bada profound dialogue. I'm sorry, I'm not doing justice to those dialogues, but that was an amazing part. If you can ever watch the Dark Knight again, pay special attention to those dialogues. These are very important dialogues. Anyway, so coming back to this, I'm sorry I got off track. So action and reaction are always equal, because if action and reaction are not equal, then the equilibrium cannot be achieved. That means the balance will be disturbed and things will not exist. Our accounting is based on this very delicate equilibrium itself. This is the equilibrium here we're talking about, right? So our assets are always equal to capital liability. So that's your action, and that is always going to be counterbalanced by a reaction. So that means every time a transaction happens, it will have an impact. Let me just write it down. Scroll karna padta baar. So if this is your accounting equation here, let me just replace capital with equity now, because that's a more appropriate term to use. So if assets are equal to the sum of equity and liabilities, right? That means that agar koi transaction hoti hai business mein, obviously it is going to have an effect on your assets, equity or liability. So now we need to understand that the principle of duality says that effect is not going to be alone. That effect is always going to be paired with another effect that you have to learn to detect. And those effects are always going to be opposite of each other in a way that they will balance this accounting equation. So the duality principle emphasizes further that this equilibrium can never be violated, because if that is going to violate, the entire accounting universe will collapse. That is why it is so important. That is why we have to make this assumption that there has to be a missing value here, because this equilibrium must never be, it can't be violated. It will always be true. So that means if a transaction happens and that transaction will have an effect on this accounting equation, it won't be just one effect. There will always be at least two effects. There could be more than two effects, but at least two effects always. And how are these effects going to eventually be affecting this accounting equation? First possibility is that if a transaction causes an increase in the assets, then the other side must also go up in order to compensate for that effect. This is the first possibility. There is another possibility, and that is that there is a possibility that a transaction may cause an asset to go down. And if that happens, then the other side of the equation will always respond to it and will come down. How? We are going to do this, a few examples. Abhi hum ye question karne lage. Abhi 1.11 is going to be the question, which is going to highlight this duality principle here. So the third possibility over here, the third possibility is there is a possibility that a transaction does not affect anything, that doesn't affect any of equity or liability items. Then there is a possibility like this, that one asset goes up, the other asset comes down, right? Then the fourth possibility is, it is possible that the asset side remains unchanged and there is a slight reshuffling in the obligation side. So these are the four possibilities of sustenance of this equilibrium. सो ड्यूअलिटी प्रिंसिपल अभी हम बहुत डिटेल में चैप्टर नंबर 2 में दोबारा पढ़ेंगे, अभी हम चैप्टर 1 में हैं इस वक्त, ठीक है. सो दिस इज जस्ट द इंट्रोडक्शन ऑफ ड्यूअलिटी प्रिंसिपल. So the principle of duality says that the equilibrium of accounting equation will always be there, no matter what financial transactions happen in the business. So that means if a transaction affects the asset side, it must also affect the liability sides in a way that the equilibrium is never disturbed. This equilibrium will always be there. And that means so we can always come across one of these four possible effects of a transaction on the accounting equation, right? Okay. So let me just put this conclusion here. Acha, do you understand the requirement of duality principle? Do you understand what duality principle is telling us? Give me a yes or no on the participants window, please. Good, good. So अभी हम डिस्कस करेंगे. अभी ये थोड़ा सा अजीब सा लग रहा होगा, लेकिन जब हम इसको एक्चुअली फाइनेंशियल ट्रांजैक्शंस की एग्जांपल्स पे इम्प्लीमेंट करेंगे, देन यू विल बी एबल टू सी दैट ड्यूअलिटी प्रिंसिपल व्हाट इट्स एक्चुअली टॉकिंग अबाउट. ठीक है. ओके, राइट. ठीक है. Now let's take a look at this example here. Right. So the first transaction over here is that we pay 70 pounds cash to a creditor, right? This is one example of a transaction, right? That we pay 70 pounds of cash, $70 of cash to a creditor. Now you see it is going to have an effect on assets. Let me just make it a little bigger, right? Okay, I'll put it over here. So what effect is it going to have on asset? I'm going to just write over here. It will cause your assets, let me choose red. Okay, it will cause your asset to go down. Which asset is going down? Cash is going down. By what amount? $70. Right? Do you agree with the first effect? That cash is going down by $70, right? What is the other effect of this transaction? What is the other effect of this transaction? If you can detect it, please write in the chat box. I'm monitoring the chat box. It's not visible on the screen now, but okay, liabilities are going down. Madiha, excellent. Yes, Maheen, very good. We have paid liabilities as Asma, that means liabilities are going down. So do you agree with this, that I am going to put a negative arrow here too? And the name of the liability in this case is what we call a creditor. Let me just make it clear. So cash is going down by $70. And liabilities are also going down by $70. So, and capital, no effect. Capital means what you owe to your owner, and that obligation towards the owner will only be affected if owner contributes more towards you or owner takes away something from you which was previously contributed. That's what the effect of that these are the two possible events which can affect your capital. Okay, so do we agree with this? Sorry, बहुत छोटा हो रहा है. Okay, so if you understand the effect of the first transaction, please give me a green check on the participants. Thank you, Ahmad. Thank you, Asma Iman. Thank you, Alicia Azim, Alina Vakas, Mina Iqbal, Madiha. Madiha, we agree? Great. Thank you, Madiha. Okay, good. Okay. So I'm going to clear them all, right? Now you are going to do the next transaction. Okay, you will tell me in the chat box what is going to happen in transaction B. Bought fixtures, paying $200 by check. Oh, before we move on to part B, do you agree with this, that the first transaction that we just recorded on the question was an example of this part? There you go. This was the possible here. If an asset goes down, an obligation will go down to balance out the effect. We see Newton's third law of motion actively in financial transactions here. Okay. So now let's do the second part. The part B, bought fixtures, $200 paying by check. Bought fixtures paying by check. So please write your answer in the chat box. I'm looking at the chat box right now. Whatever you conclude. If you are uncertain about anything, then give me a red mark on the participant window. If you understand it, then you. Okay, Alicia Azim says assets increase, but we know, Alicia, एक effect नहीं हो सकता. There have to be two effects at least, the counterbalancing effects. So your answer has to show complete answer, just like that. If assets are increasing, you need to name the asset, which asset is increasing and by what amount it's increasing. Thank you, Madiha. Assets increase by 200 and asset fall by 200. Madiha, which asset? Name the asset. Madiha, Misha Takadaf says assets increasing. But Misha, again, एक इफेक्ट को आइसोलेशन में अगर आप डिस्क्राइब करेंगे तो आप ड्यूअलिटी प्रिंसिपल को वायोलेट कर रहे हैं. यू नीड टू टेल द टू इफेक्ट्स. यू आर ओनली मेंशनिंग वन इफेक्ट. Fixtures increasing and cash in bank decreases, right? Okay, Maheen, very good, very good. ठीक है, right. Asma says assets increased by $200. But again, Asma, we can't have one effect in isolation. We have to have two effects which will cancel out the impact on each other, right? Duality principle says कि हमेशा दो effects होंगे, number one, and number two, वो दो effects इस तरह होंगे जो एक दूसरे के को cancel out कर देंगे. An action, there is to every action there is an equal and opposite reaction which cancels out, which balances out the impact. Alicia Azim says fixtures increase by 200 and cash decreases by 200. Very good. Excellent. So we know how do we do this? First of all, if you want to see duality principle in practice, you need to first of all identify the two items, at least two items. There will be more than two later on, जब हम ज़्यादा complex transactions में जाएंगे. But इस वक्त simpler transactions हैं. So her transaction में you need to identify at least two items which have been affected. So if I read the statement, then I will say, okay, fine, fixtures are being affected, right? And then there's another item, check. We are paying by check. There are two things which are being affected here. The fixtures, that's an asset, and check also represents another asset called the bank. So the answer should be that fixtures are increasing, and assets के column में ही bank is decreasing. No effect here on the liabilities and no effect on the capital, right? That's how this transaction is going to be decoded based on the principle of duality, right? We understand it? That fixtures, I'm sorry, वो मेरे पास जगह बहुत कम है, so बल्कि हम हाँ चलो ठीक है, right? If we understand this, or maybe I just draw columns here, ठीक है? Let's keep it simple. So we have transaction A, we have assets, then we have liabilities and capital or equity, right? So the first transaction, asset was decreasing. Assets were decreasing by, cash asset was decreasing by $70 and liabilities were decreasing by, called the creditor, $70, right? And capital had no effect. Okay, no effect here, right? The second transaction is that an asset is increasing called fixtures by $200 and another asset called bank is decreasing by $200, right? Right. So, and there is no effect on liabilities, no effect on the capital. The only two effects were just restricted to the asset section. We agree with transaction B's effects, please? Give me a green check mark if you understand. Green check if you understand, please. Red cross if you don't. Okay. Now transaction C. Let me just make the transactions visible to you. Bought goods on credit 275. You understand that part B is an example of this possibility on the screen, right? There is a there is a transaction which may have this possible impact that it only affects your asset and no effect on the liability. So this was the example that possibility 3, the example here, right? Good. Okay, what next? Uh, Bought goods on credit 275. So let's fill in this table here. Bought goods on credit 275. So write your answer in the chat box first, and I will put my answer here on the screen. Right. So inventory asset is increasing. Excellent, Asma, Maheen, Marceline, and Madiha Shahzad. Inventory asset or stock of goods is increasing by $275. And since you bought it on credit का मतलब क्या होता है? On credit means that you have bought something and you have not paid for it yet. You have promised to pay, but you haven't paid anything yet. So that makes the person, the vendor from whom you have bought these goods, that person a liability. Okay. So in this case, inventory is increasing. So we all agree with that. Take a stock of goods increased by 275, cash decreases by 275. Alicia, cash is not decreasing by 275. Alicia, cash is not decreasing by 275. The transaction says that it was on credit. On credit means that you have not paid cash. You promised to pay cash in future, but not at the moment. So that means you owe someone now. So I will go with the answers provided by Maheen and Asma and Matiha. And Alicia, okay, Alicia says, I understand it, so good. So I'm going to put an upwards arrow here for inventory of goods. And that value is 275. And liabilities, they are also increasing. And the name of the liability is creditor or trade payable. कुछ भी आप लिखना चाहें. दोनों acceptable terms हैं, creditor or trade payable. That is the name of the liability which is increasing. And there is no effect on the capital. If we agree with transaction C's impact on these columns, please give me a green check. Quickly, we're almost done with the lesson. ठीक है. Okay. Great. ईमान फारूक, बेटे नहीं समझ आया? मदीहा ने आंसर दे दिया था. ठीक है. अलीना सैयद. We understand this part better? If you don't understand it, please tell me. Alina probably cannot. Uska internet spotty hoga. Okay, doesn't matter. Okay, now transaction D, the proprietor introduces another $500 cash into the firm. 500 pounds of cash into the firm. Okay, first you will have a go at that and then I will put it on the screen. So in the chat box, please, everyone. जो भी आपको समझ आ रहा है, आप गलत भी लिख देंगे तो कोई मसला नहीं बेटा, right? Okay, we have the answers. No, nothing yet. So transaction D, Maheen says cash and capital, they both are increasing by $500. Okay, Maheen, that's the correct answer. Excellent. Cash and capital are increasing. So basically, you're the business entity. You are receiving cash from the owner. Remember the perspective and conclusion part. Our perspective will determine कि हमारे पास cash आ रहा है या cash जा रहा है. अगर आप owner के perspective से transaction देखेंगे तो owner is losing cash to the business. अगर आप business entity के point of view से ये transaction देखें, only then you will be able to analyze it correctly. So you're receiving cash. So the proprietor or the owner So if I have to identify two significant parts of this transaction, there is the owner and then there is cash, right? These are the two items which are going to be affected. So D transaction, ठीक है. Oh, transaction D, right? It's increase in cash, $500, and increase in no effect here in the liabilities. The capital is increasing by $500, right? Assets and liabilities are multiple types, so that is why we have to be particular which asset or which obligations have changed, which liability has changed. But capital is not of many types. Capital is simply capital. You owe it to your owner, so there's no need to mention here any different type of capital. So if we agree with this answer, then please give me a green check if you understand this. Right. Good. Okay, so we have run out of time, and I want you to attempt 1.11 का बाकी का part आप complete करेंगे और 1.12 सिर्फ आप करेंगे अभी, ठीक है? 1.11 and 1.12. Before tomorrow's class, I want you to attend these questions on your notebook, and then we are going to start tomorrow's lecture with the problems of these questions. उसके बाद फिर हम इसको आगे चलेंगे, ठीक है? Okay, so this is the end of today's lesson. If you have any questions, you can stay back. Or if you have no questions, now you can leave and move on to your next class. Stay back if you need to ask something. All right. Alicia, Amal, बेटे कुछ पूछना आपने?
Sir, won't the liabilities change as well? Because the business has to return profits.
Sorry, आपकी आवाज़ कट रही थी. क्या कह रहे बेटे? Alicia?
Won't the liabilities increase as well? Because the business has to return profits.
Yes. Part D की बात कर रहे हैं ना हम, ये last transaction, right? Yes. Okay. These are your assets. Assets equals liabilities and equity. That's your equation. So these are your obligations. So you need to know which obligation is increasing. In this case, is this the third party obligation that is increasing or the first party obligation? This is, in this case, part D, the owner is putting cash in the business. So you are getting more cash here, but at the same time, your obligation towards owner is increasing. This is an obligation, right? You get it, Alicia?
Obligation, yes, I get it.
Obligation is increasing, but that obligation is towards your owner, not towards the third parties. These are third party obligations. That's obligation towards your owner, and that was increasing.
Yes, I understand. Thank you.
You're welcome. See you tomorrow. Bye bye.